Hi friends, my name is krishnaakumalla. Welcome back to my YouTube channel. In today's video, we are going to discuss on journal entries. What are the journal entries to be posted while we are, calculating the depreciation on straight line method and how the ledger is going. I'm going to explain these, two concepts today. Without wasting much time, let us get into the presentation. Okay, friends, let us talk about the journal entries first. There are two ways of showcasing journal entries. When I say two ways, there are companies, what they will do, they will create a depreciation account in master data, and they will also create accumulated depreciation account or provision for depreciation account. It depends. Some people will call it as provision for depreciation, some people will call it as accumulated depreciation. They will create another account called accumulated depreciation account, and they will have anyway asset account. Each asset will have its own account code, master code. So as and when the depreciation is calculated, what entry they will post is depreciation is what? Wear and tear. It is loss, right? So all expenses and losses are supposed to be debited, right? So depreciation account is supposed to be debited. Depreciation account to be debited because it is nominal account. All expenses and losses to be debited. Hence, we are debiting depreciation account. Then what we credit here is we credit accumulated depreciation account or provision for depreciation account. Accumulated depreciation or provision for depreciation is a liability. Accumulated depreciation or provision for depreciation is a liability. You know, all liabilities are credit balances. So what we do, we credit provision for depreciation account or accumulated depreciation account. We don't credit asset account here. Though the asset value is being reduced, we don't credit to asset account. Instead of crediting asset account, what do? We credit provision for depreciation account or accumulated depreciation account. This is the first entry. Next, what do we do? As soon as the depreciation account is debited, this has to be transferred to profit and loss account of that particular year. This depreciation has to be transferred to profit and loss account of that year. What do? Profit and loss account. Where do we show this amount in depreciation amount in profit and loss account? Since it is a loss, you need to debit profit and loss account. So profit and loss account debit to depreciation is already debited. You are transferring it, so you have to credit it. So profit and loss account debit to depreciation account. These are the two journal entries we need to post. This is one way of accounting for depreciation. The other way of accounting depreciation is we debit depreciation account because it is loss. Depreciation account debit. To this extent, to the extent of depreciation, what do? We credit the asset. Previously, what we did, we credited accumulated depreciation. Now, what we are doing, we are crediting asset account to asset account. Here, the impact of depreciation is straight away given to the asset account. In previous version, depreciation we debited and we credited accumulated depreciation. Instead of crediting asset, we credited accumulated depreciation in our previous method. In this method, what we are doing, we are debiting depreciation because it is loss. Instead of crediting accumulated depreciation, what we are doing, we are crediting to asset account. We are crediting to asset account. As usual, other entry. Anyway, depreciation account is a loss, so it has to be transferred to profit and loss account by end of the year. So what we do, P&L account debit to depreciation account. Why P&L account is debited? Because it is loss. All expenses and losses to be debited in P&L account, so debited. Depreciation already debited, we are transferring, so we are creating it. So these are the two journal entries, two different type of journal entries, I can say, being posted by companies or any business organizations. So first one is Instead of crediting asset account, we are creating accumulated depreciation. Here we are creating asset account. How this is going to appear in our balance sheet? If I prepare balance sheet here, asset account will be shown with the original cost. Asset account will be shown with original cost, and provision for depreciation will be shown in liability side of the balance sheet. Provision for depreciation is shown in the liability side of the balance sheet in this particular method. The other method, what we do in balance sheet, asset account will be shown, original cost will be shown in inner column, and less depreciation we will show, and net asset value will be shown in outer column. See here what we are showing, we are not showing the asset with the original cost. We are showing the original cost minus depreciation and showcasing the net asset value in the balance sheet. Here, asset value is shown in balance sheet with the original cost, and accumulated depreciation is shown in liability side of the balance sheet. I hope you understand the difference between these two methods while preparing the balance sheet. Clear? Now, what will happen if you prepare depreciation account? If you prepare depreciation account, what do we do? The first entry in this method, I'm talking about this method. What do? We debit to accumulated depreciation account. Then what do? This amount has to be transferred to profit and loss account, by profit and loss account. So depreciation account will be closed. Similar way, you need to prepare accumulated depreciation account. Accumulated depreciation account is created here. So credit side, you need to write by depreciation account. By depreciation account. So this has to be carry forward to next year. So to balance carried down by balance brought down. This is how the accumulated depreciation will be carried forwarded. See here, this depreciation is already charged to the P&L account, and this accumulated depreciation is being carried forward to next year. It is shown in liability side of the balance sheet, and it will be carried forward to next year. This is how depreciation and accumulated depreciation accounts are being prepared. If you prepare asset account in this method, how it will be? Asset will be shown with the original cost to bank account. Original cost, end of the year, by balance carried down, to balance brought down. Every year, by balance carried down, to balance brought down. By balance carried down, to balance brought down. This is how the asset account will be shown. That means what? Asset account will be shown with the original cost for every year. Till such time the useful life of the asset is over, the original cost of the asset will be shown with the same price. That is how this model is going to work. Next, other model. In this model, how depreciation account will be prepared? Depreciation account will be prepared by debiting to asset account. To asset account, we debit and we transfer this to by P&L account. Depreciation account debit to asset account. Depreciation account is debited, hence debit side to asset account we have written. And depreciation is transferred to profit and loss account. Hence by depreciation account is created here, by P&L account we write. That's all. Depreciation is transferred to P&L account. Then what will happen in balance sheet? We have to prepare the asset account, right? Asset account. Asset account we would have purchased with two bank. We purchased with some value. So asset account debit to bank account was the entry. So asset account debit side to bank we would have written an entry. Then with this depreciation, asset account was created. So by depreciation, you show the amount and you balance this. By balance carried down, to balance brought down, you show that as an asset value. That's all. This is how the asset and depreciation accounts are shown in second method. Very clear? So these are the important points you need to keep in mind while preparing the journal entries. And once you prepare the journal entries, how these things are going to be shown in the ledger also being explained in this. I hope you are clear on this topic, right? That's all for the day. Thank you so much.